Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like all is good. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind there's risk with each trade that you take. So you want to manage risk in a way that makes sense from a perspective of your risk tolerance, your balance size, etc. There's some risk management features that we'll go through perhaps in today's strategy if we simulate some potential trades where you'll see how the order window assists you with your risk management with some of the calculation features that are built into it. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, before we get on the live charts and get into the news as it's coming in today, what is fundamental analysis for anyone who's new to things? Basically, it's looking at the news as it relates to different instruments that you might be interested in trading on. And so there are different types of news we look at. It could be an economic calendar with economic events that are scheduled in a more regular fashion. We'll look at some of those that are upcoming and work some strategies around those types of announcements. And then also there's other types of news, extraordinary type events that maybe are not scheduled, that are popping up from time to time in the headlines. And the most recent one, there's word last night coming into today that there's some escalating tensions maybe with Iran and Israel with the whole situation that's been going on since this past October between Israel and Hamas. And so oil prices spiked up a bit, and there could be an effect on other instruments depending if there's anything to those rumors or not. And that's just one example of an event affecting certain instruments more than others and popping up unexpectedly, or if not unexpected, but at least not scheduled in terms of timing. And so both types of news affect the markets, the scheduled kind, economic announcements, that sort of thing, the unplanned kind. And we can think of other examples in the past of unplanned fundamental news that affected the markets, whether it was the global pandemic that occurred and the headlines that kept coming out about how it was spreading and was there a treatment for it yet or not, or a vaccine. Also the Russian invasion into Ukraine. These sorts of things, not scheduled, at least not by the average person to know that they're scheduled, and certainly can affect the markets and different sectors of the market in terms of what you might be trading on. And so we take these things into account as we then go on to the charts to do our technical analysis and find maybe opportunistic entry and exit points based on the technical strategies. But the fundamental news many times is the overriding factor that determines the directionality. And the technical analysis then is maybe what you use to pinpoint the spot at which you'll get in and out in the direction that the fundamental news dictates. So if you have any questions as we go along, feel free to use the question box there. And if you want to share anything as well, if it's pertinent to what we're talking about, sometimes it's interesting to share some tidbits as well that relates to maybe something we're talking about. Now, from our main website, we can log into the web trader, and everything we use in the web trader platform is also available in the AvaTrade Go mobile app. So the free signals, the market news, the advanced economic calendar with the data analysis features built into it, everything that we use is also available in the app. And both the app and the web trader allow you to trade on MT4 and MT5 accounts. So you can have both account types from one place without having to use separate platforms for MetaTrader 4 and MetaTrader 5, which you'd have to do if you didn't use our web trader or our app. Okay, so if we log in here, then we're in the web trader, and the Guardian Angel feature, you can use that. It gives you tidbits and information about your trading, gives you maybe some tips about your exposure, or your which instruments you've done best on, keeps track of your statistics in all kinds of different ways. You can turn that feature on and off, by the way, over here. Okay, Guardian Angel, you can turn it on. You click on it, it opens it. You can change the settings, what features you really want to have it help you with, what features you don't want to have it help you with. So you can use it as much or as little as you would like. And it really is a pretty cool feature, and we provide that for free as well. So we just keep adding new features that help traders in our web trader and our app, and that's one of the latest updates that's been added. Now, fundamental news, good place to start. Let's go to the economic calendar. So in the discovery section, we find the economic calendar. We need to keep in mind the news maybe that I already mentioned. There's some fear out there about a regional conflict escalating in the Middle East. Obviously, that could disrupt potential supply lines for things like crude oil. And so we already saw a spike in crude oil prices. And so we could take a look at crude oil, see what's going on there. That tension could exist maybe in the coming hours and days, and even longer. We'll see how things go. But beyond that, now we're also looking at the scheduled economic announcements that have come in and that will be coming in. So let's go to the correct month. April, today is the 4th. So let's look at today and see what is upcoming. These announcements already occurred. And in general, what we saw out of the European Union is that the numbers were weaker than expected. Okay, so PPI data, for example, was expected to drop by 0.4. It dropped the full 1%. There's some other data that came in that was similar in that regard. So maybe a good sign that the data was a little lower than expected, meaning maybe inflation's on its way down more significantly, which was the aim of many central banks. Now on to the US announcements that have not occurred yet. And so we can take a look at what you could still do surrounding these announcements for trading on the statistical analysis of the past announcements. You know, in the US, there's still a focus on when will they lower interest rates. There was a big surge of fear that hit the market yesterday in the US because the data's just been stronger than expected again and again and again. The advanced data payroll showed yesterday. I can pull that up. Let's look at what came out of the US yesterday. We see that the ADP employment numbers came in higher than expected. What's ADP? It's the advanced data payroll. And so it's the numbers that come in advance of the non-farm payroll numbers, which come in tomorrow. Okay, the first Friday of each month typically is when the non-farm payroll job numbers come in. And so the ADP numbers, the advanced data payroll, is the Wednesday before the actual numbers come in on Friday. Okay, so these were yesterday's numbers showing a larger uptick in hiring than expected. It was expected to drop from 155 to 125, and it actually went up. So that created a lot of fear on the markets that the US just won't be able to lower interest rates anytime soon because the inflation is still too high, and the jobs numbers are helping to keep the inflation high because employment has been strong. And so that fear caused a sell-off in the markets yesterday. Okay, the equities, especially major indices, sold off and had quite a drop. Okay, so the relationship there has been, you know, if interest rates have to stay higher longer, that makes everything more expensive in terms of growing a business, because business loans then are more expensive, buying a car loans are more expensive, buying a house, etc. If interest rates are higher, it's more expensive to borrow money. Okay, it keeps the currency strong, which then keeps, hopefully, eventually, prices coming down. If it's more expensive to borrow money, then you can't afford to pay as much for things, and then the prices come down. This was the idea of the U.S. raising interest rates 10, 11 times like they did over the past year plus, was to try and bring inflation down, to bring prices down. And essentially they cause economic pain in order to do that. And so that was one of the stimuluses yesterday of the sell-off that occurred. And so we go into today then, and we say, okay, if the initial jobless claims today come in better than expected or worse than expected, what kind of effect might we expect it to have? And so we don't have to guess, we don't have to speculate. We can look, what was the effect recently? So initial jobless claims, let's take a look at how they've come in the past. We can use Euro USD or any USD pairing we want. I'll leave it on Euro USD. And we can then look different time frames after the announcement. I'll leave it on 4 hours for now. And then we can qualify the past announcements. If they came in, if this announcement came in above forecast, meaning more initial jobless claims than expected, what happened in the past? Well, it only happened 3 times that the jobless claims were higher than expected, and 1 time it went up and 2 times it went down. Okay, so 2/3 of the time the USD strengthened when that happened. That's not a lot of data points, by the way. 3. Let's see if we go below forecast. I feel a little better about that number of data points. 8 times it occurred this way. And 5 out of 8 times, the USD strengthened significantly when the numbers came in below forecast. Okay? When we go back to the other situation above forecast, you say it's also a solid percentage that dropped, but if one of them just went the other way, it would have been 67% up instead of down. You understand? So this doesn't give me a lot of confidence to know, is it really a major trend down 67% of the time when it's only 2 out of 3? I mean, all we needed was 1 to go the other way, and it's 67% the other way. So I don't hold a lot of credence in that number of data points. I feel better about this one, where I see 8 times it happened and still over 60% the USD strengthened. So I potentially would be looking to see if this data comes in below forecast, meaning better than expected, right? This is jobless claims. This isn't hiring. This isn't new jobs. This is jobless claims, people losing their jobs, filing for unemployment. So when this number's lower than expected, that's better news than expected. And again, then it makes sense that the USD would strengthen if better news than expected came in, because again, everyone's going to say, well, they really can't lower interest rates yet, and that helps keep the USD strong potentially. Okay, so kind of a mixed bag with the data here, but I feel the data is stronger here to form a relationship that if these numbers come in below forecast, 2/3 of the time almost, the USD strengthens. It gives you the pip range of how far you expect it to move within the time frame. So after 4 hours, an average true range of over 42 pips. Okay, and 2/3 of the time, approximately, you'd have been profitable if you were selling. If you look after only 5 minutes, the average range movement is 12 pips. So it's not like it goes that full 40 pips immediately. Even in the first 5 minutes, the range movement was only 12. Okay, you see here, a lot of these were under 10. 5 pips, 3 pips, 7 pips, 4 pips, less than 1 pip. Only 1 went a little further, and still that was only 23 pips. Remember, after 4 hours, we're talking 54 pips, 41 pips, 41 pips, and a couple that went less, 19 pips, almost 11 pips. Okay, so A lot more movement occurred on the majority of these after 5 minutes, and the majority of that movement was down further. Okay, so you could start to analyze different time frames and see which time frames you'd be interested. You can look at 1 hour. After 1 hour, it's a higher percentage. 75% were down. After 4 hours, only 63% of the time it was down. Okay, so you could start to have a time frame that you want to get in within the first 5 minutes. I want to close after about an hour, based on the past statistics. Okay, for this particular announcement, and only if it comes in below forecast, maybe. Okay, so you start to go through and you get a plan for each announcement. That if it comes in like this, I'll trade in this direction. If it comes in the other way, maybe I don't trade, or maybe I trade the opposite direction based on what did the statistics from the past show. Okay, now we can move on to tomorrow, which is really the big announcement that's coming. If we look at tomorrow's announcements out of the US, there are other announcements. Factory orders out of Germany, it's a big one. Okay, we can look and see what effect. If it comes in above forecast, 60% of the time the USD strengthened. If it comes in below forecast, 71% of the time the USD strengthened. So I would be looking on this one, if the data comes in worse than expected on factory orders, that the euro will weaken against the USD the majority of the time. Okay, it seems you have the advantage to sell if these numbers come in below forecast. You just have to look for the entry point. Okay, I wanted to take a little better look at the non-farm payroll data that's coming in tomorrow. Again, that's the largest jobs announcement each month out of the US. And many would say the largest jobs announcement globally to trade on in terms of volume of trading that occurs with different announcements. This is a very heavily traded announcement. The non-farm payrolls, it's once a month, the first Friday typically of each month. Okay, so if we take a look, then the expectation is a drop. And that's key many times. You can read into the sentiment here is that they're expecting good news, meaning a slowdown in jobs, which usually is bad news, right? But in this case, a slowdown in hiring, which then will make the market say, things are slowing down. Maybe they will lower interest rates sooner rather than later. If these numbers show a big slowdown in hiring, and then maybe the markets would go up in happiness from that, right? And the USD would weaken, and the euro and the pound would climb against the USD, etc. Those are potential things that could happen if these numbers do drop significantly. If they come in better than expected, and maybe even don't even show a decrease, but come in at 300,000, something like that, boy, that could spark fear like it did yesterday with the advanced data. Remember, the advanced data showed hiring was way stronger than expected. So if the same thing happens tomorrow on the non-farm payroll, and this comes in significantly higher than 200,000, and anywhere near 275,000 or higher, you could see fear again that, wow, the U.S. just will not be able to lower interest rates anytime soon. And that creates fear that while the housing sector could eventually be the next one to get hit in the U.S., and who knows about cars, etc., all the different areas that depend on loans and interest rates, there's fear about that if these rates can't be cut sometime soon. So let's take a look at what's happened in the recent announcements with the non-farm payroll. If we leave it on Euro USD is fine. We could switch to other pairings if you want. It does make sense if you're choosing to trade on an announcement, analyze a few different currency pairings and see which one has the higher percent probability in your favor. Okay, which one looks more predictable? Typically, I've found the Euro USD to be more predictable. The GBP USD, for example, little less predictability, but further movements, larger movements. So, if the average range movement on Euro USD is 70 pips in 4 hours, the GBP USD might be 90 pips. But the predictability on Euro USD might be 75% of the time in one direction, and the pound might only be like 60% of the time in that direction. So with the increased potential larger movement with the GBP USD, you tend to see a little less predictability or certainty. So I tend to use Euro USD as the example because it tends to be a bit more predictable in terms of the statistics that this tool shows you. All right, now we'll leave it on 4 hours after the event, and if these numbers come in above forecast, better than expected, we see the past announcements have been 50-50, up and down. But what's interesting here is, while the percentage is 50-50, the majority of movement has been down. So 4 of them went up, but look how far they went up. Very little up. The largest movement up was 23 pips. Okay? And some of them only went up 8 pips. Less than 5 pips. Okay? So the green was much smaller, even though it went up half the time. The red is much larger. We're talking 94 pips on this one, 62 pips, 48, and 23. The smallest movement down is almost as big as the largest movement that went up. And these other 3 that went down were multiple times greater than the upward movements. So with this tool, you're not only analyzing the percent of the time that it went a certain direction, but also the distance that it went. And so there's a clear advantage here. Even though the end result is 50-50 in terms of directionality, there's a clear advantage here in the proportion of movement in one direction compared to the other. Much larger number of pips down than up, even though it's 50-50. So what that tells you is if these numbers come in above forecast, you think, okay, USD strengthened a lot more pips-wise, distance-wise in the past against the euro rather than the euro strengthening against the USD. So you know you can put, based on this past, your stop loss a shorter distance and your take profit a longer distance. And statistically, if you had done that in the past, you'd have lost the same amount of time that you won, but you'd have won more money than you lost because the take profits could have been further away and the stop losses would have been a shorter distance. So you'd have lost a small amount here or nothing because it never even reached the stop loss maybe. On a couple, you might have hit your stop loss twice and the rest would have been down somewhere in profit. Okay, and a much larger profit, 1, 2, 3 times compared to these losses. Okay, so you can start to build not only a directionality plan based on how the numbers come in, but a distance in terms of how far will I have my take profit compared to my stop loss. And these statistics are pretty clear to me that there's an advantage downward when the numbers are better than expected. And that might make sense, right? That the USD would strengthen if the jobs numbers are better than expected. Okay? If it comes in below forecast, wow, that's pretty clear, right? If these numbers come in below the expected 200K, in the past, when it came in below forecast, 75% of the time, the USD weakened. And again, it makes sense in your mind, right? To say, if these numbers are worse than expected, then folks are going to believe that, hey, now they can maybe start lowering interest rates because everything's slowing down, even the jobs market, if these numbers are worse than expected. And so the expectation that they could start to lower interest rates sooner then causes the USD to maybe weaken. And up goes the euro, 75% of the time when the numbers came in below forecast. So clearly there's a direct relationship here. Below forecast, look at all the green up. Yeah, it went down once, but barely. Not only did it only go down 1 out of 4 times, but when it did, it barely went down. You almost could have won on all 4 buying when these numbers came in below expectation. And you see the movement. Average range movement, 73 pips. In the first 5 minutes, it's only gone 27 pips. You see? So it's not like it's too late to trade just because it already spiked 20 pips in the first minute or something. You can see the numbers. You can decide whether you want to make the move or not based on the entry. And with the understanding that in the past, you know how far it went after, say, 4 hours when the announcement came in below forecast. Okay, so a night and day difference. Below forecast, look at all the green up. Above forecast, look at all the red down, okay? Proportionally, this is an easy decision based on these stats of what you might do. Now, there's no guarantee you're going to win every time when you do this, okay? It's about statistics. It's about trying this with multiple tries, maybe 20, 30, 40 times on different announcements, trying to see if the statistics eventually fall in your favor in the future like they did in the past. And this is the way data-driven trading works. And you might find that certain announcements work better than others. And then you start to zero in each week, each month, which announcements you prefer to follow this strategy on, okay? Any questions, comments on what we've covered so far? Okay, if I see any questions pop up, which I don't yet, but if I do, I'll address them as I go along. And we could look at other announcements that are at the same time. Maybe the non-farm payrolls look predictable, but I look at something else and they're not predictable, and then I know which one is maybe cueing the movement more than the other. Average hourly earnings, it's not as big of an announcement, but it still gives a peek about what's the health of the economy here. Andy, unfortunately, this tool only allows us to switch to different currency pairings to analyze the past movements. I do wish that it had the commodities like gold, crude oil, etc., to see what was the relationship on those movements with these announcements. Many times you can draw a correlation between different instruments, but the movements aren't obviously going to be exactly the same. If the USD is strengthening, many times certain commodities will come down, just like the euro comes down against the USD when it's strengthening, and vice versa. If the USD is weakening and the euro's climbing, you might expect that crude oil maybe could climb against the USD as well. But it's not always a one-to-one relationship like that. So I would only use this tool to determine how you feel about the currency pairings that you're analyzing. And unfortunately, we can't use it to analyze the commodities. It's not built into this system. Good question. So what we're looking at here then is the hourly earnings. And if those have come in above forecast, we see almost 50-50 movement. 57% up, 43% down. That to me, that's not statistically significant. And it makes sense, right? That maybe this announcement is not the one driving the movement. Even though this announcement coming in above forecast would tend to strengthen the USD probably, because it's happening at the exact same time as a much more significant announcement, the non-farm payroll, its effect gets drowned out because it's the non-farm payroll that's being focused on more, perhaps. Okay, and so you see that effect with smaller announcements that occur at the same time as larger announcements. Okay, again, 60-40. It's not enough significance for me. Okay, so it looks like focusing on the high-level announcements here, specifically the non-farm payroll, makes more sense here than focusing on the medium-level announcements, such as the hourly earnings. On a different day, if the hourly earnings were coming in without being paired against the non-farm payroll, then probably you'd see a more significant statistical effect. Okay, and so sometimes it's not what is being announced, but it's what is it being announced with at the same time. Okay, so that's the biggest one for tomorrow, the non-farm payroll. So let me show you another way kind of also to manage when you know there's big fundamental news coming up. And let's use gold as an example, since it was mentioned. Can we pair this against gold? So let me give you some other insight on how you could maybe use some of our tools to trade on gold. So first of all, let's do a chart analysis. And what we can see if we look at gold is it's been on a huge run up. I mean, just look at the climb where it just keeps going above resistance levels and establishing new support levels. and breaking through resistance levels and establishing new support levels, and again breaking through resistance levels and establishing new support levels, and it just seems like there's no end in sight, perhaps. You know, part of why this is happening, many believe, is related to the fact that inflation has remained higher than expected. There's fear in the equity area about that. And the fact that the U.S. has not been able to lower interest rates yet creates fear on the markets, and gold is a traditional safe haven when there's fear. Whether it's fear about high interest rates, fear about inflation, fear about war, which also could be adding momentum here because we've got two different wars going on that are pretty major. I mean, there are other wars going on, but two major ones that have been in the news: Russia, Ukraine, and Israel, Hamas situation, and Lebanon as well, obviously, and Iran and all these other players. So all of that can add, you know, an impetus for gold to be a safe haven. Now, if any one of those factors changes drastically, you could see a large pullback. So tomorrow's announcement out of the U.S. and the non-farm payrolls, since they're really looked at huge by the markets, that could be an impetus if the numbers come in to relieve some of this fear. Maybe if the job numbers come in worse than expected, you could see people sell off out of gold and maybe buy back into the equities, the stocks, the indices, other instruments that they deem a little too risky right now. So what I'm pointing out then is potential, right? Potential. There's the potential for a huge pullback. Climbing is a little harder, right? It's been climbing so much that it finds resistance, and it takes days then to get moving again. Like it hit resistance here, it dropped for 2-3 days. It took a few days to get back up to where it was, then it broke through. Then it went sideways for 2 or 3 or 4 days, found resistance, pulled back, and then broke through, okay? So we haven't seen this type of, the size of these climbs, we haven't seen that kind of drop for a long time. So the potential for a pullback is there. And so those of you who have been trying to find a spot to short gold, but it just keeps climbing. And I'm not saying you shouldn't buy on gold. There's a lot of fear out there, and gold is very bullish. So you certainly could buy on gold. But if you're looking for opportunity, and tomorrow's economic announcements out of the U.S. provide a huge opportunity for a potential large move if you're looking for a pullback here, okay? It also could provide momentum to go up, right? And since we have that uncertainty, we can use a tool like AvaProtect, okay? So when you know there's huge fundamental news and you're not sure about how it'll come in, but you have a direction maybe you prefer, you can use AvaProtect. So, you know, I'm not convinced gold will drop tomorrow, but I am convinced that it could if those numbers come in just the right way out of the U.S. And if it drops, I know it's gone up a ton lately. So I know there's a potential for probably a faster drop than there is the potential for a fast climb after all the climbing it already did. So in my mind, I'm saying, all right, I don't know that it'll drop tomorrow, but I know there's potential for a large drop because of the fundamental news. So this is the kind of the opposite of what we're doing on the economic calendar. On the economic calendar, we wanted to see what the results were and then trade based on the past data, already knowing what the results were. Now I'm proposing a strategy where you could try to predict which way you think it might go before the numbers come in, okay? And so, but in a protected way. So first I'm picking out my price points and I'm saying, you know what? If these numbers cause a reversal of this fear, if tomorrow is the time that finally the jobs bottom out and potentially the fear about inflation could drop, then maybe this could pull back at least the rapid climb that it had on these 1, 2, 3 days without having to break the support level down here. We see this was resistance, 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 and then once it went up, that became support, and up went the movement. So if there's a large reversal without even having to break this support level here, that could be a significant take profit. So 22.39 would be before this support level on the 1-day candles, before that old resistance level. So 22.39, if I do Ava Protect, and I go to take profit 22.39, okay? Yeah, 21,000 profits, nice, but I need to adjust my trade sizes and the length of the protection. Maybe I want to protect this not just through the announcements tomorrow, but through the weekend, all the way to Monday, because so many things could happen between now and then to work in my favor, perhaps. And I don't have any risk. If things go against me, my only risk is the cost of the protection until the protection ends. So I can be patient. I could close early if I want to, or let it go. So I'm going to put a couple days protection, 2 days protection. You see, takes me to the expiry of my protection is on the 8th now, April 8th at 5 p.m. Okay, it shows the expiry here. Now I can adjust my trade size so that I'm risking or paying, in this case, the amount that I'm willing to risk per trade. So if I do half a lot, 0.5, half a lot, the protection costs me $8.58. Okay, 1% would be around 600 or so, 650, 670. So 0.4, the protection costs me 686. That's near 1% of my balance, a little more. Maybe I'm comfortable with that. 686, around 1%, little more, 1.1, 1.2% risk or cost for this trade. And that's up to each trader. I can adjust this smaller or larger if I'm less aggressive, more aggressive. But it's calculating the cost, and you know what your balance is, so you can risk whatever percent of your balance you want on the move. So my risk is the cost of the protection. It's a flat risk during the protected time period. Okay? Now I can see that my potential profit is greater than 3 times that. So if I lose on something like this once or twice and I win once, I can still be an overall profit. Okay? Because I have a measured risk and my profit potential can be much larger. Now, I don't even have to put my take profit at that first support level. I could put it at the next one down here. So maybe I think it could drop to 2,200 even. And if it hits 22.39 and I want to close it manually, then I can do that. 2,200 even, that's a natural spot to find support because it's a round number. And we see in the past, that was a resistance level down around 2,200. Resistance, resistance, that took several days before it broke above 2,200. Okay? And when it went back below, it became resistance again here. Took a couple days again. And when it broke above 2,200, it shot up like a rocket. So that's a natural spot that if it's going to drop significantly, maybe where it could find support around 2,200. So maybe that's my spot because I'm giving it until Monday with my protection. I've got some time to wait. And if I want to close it early at 22.40 or something, if it went that way, I can do that. So now my potential profit is more than 6 times or about 6 times what it costs for the protection. I kind of like that better. So you set up the cost of your protection, which is your risk in this case, your potential profit, and then you're ready to go with your move, okay? The direction is determined by different things here. One is potential. After so much climbing, maybe there's more of a potential for a rapid drop than a rapid climb. Maybe also on a feeling you could have. Maybe you think finally those numbers will relieve some of the fear about inflation and that maybe now gold will pull back. But in the end, you pick the direction that makes the most sense to you, but you can protect it in a unique way with Ava Protect. And for a unique time period, based on the fact that this big announcement is tomorrow. So I get in a day before the announcement, I can hold it until the next business day after the weekend after the announcement, and I have a capped risk. So 2 different ideas. The economic calendar announcements, trading on the data that already came in, based on past movements. And in this case, knowing that there's a large announcement coming fundamentally, but trading on it before it comes in because of potential. Okay, a couple different ways to go at the same type of information, but one trading only after you know the results, and the other trading preemptively based on what you think the most potential is there. Any questions about what we've covered so far? Okay, so and if you want to keep an eye on your trades, you just go to the suitcase. You see it shows that it has protection, has the gold shield. If you ever want to look at the details of the trade, click on the eye. You can see the time to expiry. It's protected for another 99 hours and 18 minutes. Okay, that's a lifetime, 99 hours and 18 minutes when we talk about gold. I mean, that length of time, you could see $100 an ounce movement or more in gold. So the potential is there to make a lot more than the cost of the protection. Okay, you just hope that more times than not, or at least enough times than not, you're correct in the direction so that you make more in the long run than you pay for the protection, right? I can lose 2 out of 3 times doing this and still profit if I'm strategically doing this when I know there could be really big moves, because then the one that moves the right way can make a lot more than what I lost on the last 2 attempts where I paid the protection and didn't get a profit. So that's the idea of doing this strategy around a large announcement like the non-farm payroll, so that one that goes the right way can pay you a heck of a lot more than the 1 or 2 or 3 that you used the protection and didn't win on it. And then you were just down the cost of the protection those 1 or 2 or 3 times. And then the one time that it hits, you make 5 or 6 times what the protection cost. Okay, that's the idea with the strategy I just showed you anyways. Okay, so I think this is a good place to stop. I expect a lot of movement. Keep an eye on the news for what's happening in the Middle East with Iran and Israel, etc. And keep an eye on those numbers as they come in tomorrow out of the U.S. for the non-farm payroll and the hourly earnings, etc. All right, everybody, thank you for joining, and good luck with your trading the rest of the week. Bye for now.